600 seconds of trading. It's about 9 a.m. in London when we're recording this, and we're doing it live from our London offices near St. Paul's Cathedral in the city of London. Today is not an ordinary Friday, it's actually NFP Friday. So should be quiet, and then when the data's out, some fireworks. I'm not sure there was going to be huge fireworks just because of 4th of July earlier this week. As you probably noticed, the market has been very, very quiet, and today London as well is very quiet. I have a feeling that people have taken Friday off and are probably on their way to a beach in Spain, in Italy or Greece or something like that. So don't really expect too much movement, but should be something at least. It is, at the end of the day, the non-farm payrolls. So according to the economists, they anticipate a number of 195,000. I think if we pretty much print around that number, we should be okay. The dollar should be fine. And then you have average hourly earnings at 2.8. And this is the range over the last few months. And you can see a low here in May 2017 at 2.5, and then we sort of bounced off from that level several times since December 2016. At the same time as well, we've been capped by a growth of 2.9. So we're in a bit of a range here, and it's not technical analysis, but you can just look at it like this. What if we print 2.9 or maybe 3%? Then suddenly we're literally breaking out of this range, and then suddenly maybe this could be sort of self-fulfilling and potentially pushes a move to the upside. And I think the Fed will definitely react on that, and the dollar should also react on that. And this is sort of the key point anyway. And this is the key point of data. Because as long as this figure is around, I think above 150,000, then the unemployment rate is going to remain unchanged. And the unemployment rate itself, as you can see, has been moving to the downside, and it's at 3.8%. And the reason for this is that the labor force, so the amount of people actually joining the labor market, is about 150,000. So as long as we have a number higher than that, then eventually the unemployment rate is going to take to the downside. And as long as the unemployment rate takes to the downside or remains at an extremely low 3.8, then wage growth should pick up. So that's sort of what you should be looking at. Today as well, you have Canadian numbers. Here you just look at the unemployment rate. The unemployment rate itself has been going to the downside, but not to the same degree as the US. And that's one of the reasons why the Canadians have increased interest rates, but not to the same extent as the Americans. So an improving economy here as well. And what you want to look for Canada is net change in employment. I'm quite sure there should be wage growth published somewhere, but it's nothing that people sort of estimate. I'm not sure if it's part of this report. We just need to check that out. But it's nothing that we should focus on right now anyway from a trading perspective, because nobody else is going to focus on that. So here, better than 24,000, sorry, that should be positive. Over the last few months, sort of the numbers have disappointed a little bit. In the case of the US, by the way, the histogram, which is sort of light orange, shows if it beat or failed to meet expectations. Okay, so let's take a look, and we'll take a look at the euro. So euro is moving to the upside. It's continuing to push. Traded above this June 25th high, which also happened to be, I think, the June 13th low. And I think, unfortunately, this could potentially continue here. We do see the dollar weakening, in particular against emerging markets. And what the non-farm payrolls today is going to be relatively binary. Either the numbers are really good, sorry, and we go to the downside, or the numbers are going to be bad and we're trading around 118, so up here. Now, what sort of are the strategies? Well, I think let's look beyond today. Let's sort of put things into perspective. Will the ECB increase interest rates anytime soon? No. Will the Fed increase interest rates anytime soon? Yes. How likely is it that the economic data today is better than expected? Quite high. And if it's not too high, does it actually matter with the unemployment rate of 3.8%? No. So the data today does not have to matter too much for the long run. Okay, so we now know the long run is for this to trade to the downside. What's sort of the long run important technical level to watch? Well, it is the trend defining level up here at 118.53. So as long as the number's not terrible, I'm happy to be bearish. And in fact, I'm happy to be bearish right now. I'm not shorting it myself, but the trend is bearish below this level. Okay. Now we need to ask ourselves: do we have to have a position in the market all the time? No, we don't. And what is my? If I could choose my entry, what would that entry be? That entry would be to sell on the break of the June low. Why? Because we have a triple bottom here. Take that out. There's probably a ton of stop loss orders here. At the same time, this market has declined strongly for quite some time, and we haven't had like a strong pullback. I thought this pullback would be stronger. So again, there's no real change to the outlook I've been sharing with you guys for at least, I think, 4 weeks now. I remain bearish below this high, and I suspect that up here people are going to sell. I got this movement right, and hopefully we get this one right as well. Here's Bitcoin, and Bitcoin remains capped by that trend defining high. There's not too much activity. Take out 6,805 and we'll go to the upside. Will non-farm payrolls influence Bitcoin in general? No, it won't. Bitcoin is, as much of the other crypto markets, trading on regulations. So sort of the last move is that Facebook now opened up for advertising again, as long as you are sort of licensed to have the right to sort of market it. I'm not sure about the actual details of the procedure, but in essence, if you're a broker, FCA regulated, you should be able to sort of market your goods. You can't necessarily market ICOs, but you can still market Bitcoin and things like that. So that's sort of, I think that sort of give the market a bit of a push, and that's the sort of things that people are watching. And if we take out that high again, the market can head to the upside. And that might actually happen maybe this weekend. It's relatively typical, like in the weekend, that sort of proper retail market or even institutional, so miners and people like that. There's definitely not futures markets open over the weekend, and we tend to see some moves over the weekend. The problem is, of course, that we don't really see sort of the moves we used to see here in the past. Here's gold. Gold, moved to the downside and is stabilized. Remember, we had a profit target down here. Now, the last entry was to sell here. We moved to that level and then sort of moved back up again. And I think here it's going to be relatively binary. If I show you the daily chart, it makes more sense. So you see this? This is December 2017 low. Take that out. We'll head down to 12.15. On the other hand, take out the high, so pretty much 12.62 or 12.64, and we could potentially move up to maybe a level like 12.80 or something like that. It could potentially push higher. And that's it, really. Good non-farm payrolls, down. Bad non-farm payrolls, bit of more of a squeeze. Here's crude oil, and yes, I'm looking at a daily chart because it makes more sense to look at it from a daily chart. It's easier to explain as well. You're dealing with a big uptrend, a strong move. It can easily continue to gain, even though the market is up with 18%. The market is right now consolidating, and people are watching this and say, okay, nice run, 18%, that's not bad. So some people that are trading in the short term, they're fully aware that the market will sometimes have like these 18% declines. Here was, 12.13, here's 12.67, and even shallower moves as well, like this, which is 7. So on a break to this level, we could potentially have a bit of a corrective move, maybe down to 70-ish, and then you have a low, and that could potentially be where people are going to look to get involved again. If we take a Fibonacci like this, first fib target is here, and then 50%. So down here, I think it could make sense to potentially look to get involved. If you're a scalper, it is potentially possible to sell on the break to the downside. This is also definitely a scenario to consider. Let it trade sideways for a few more days, and then we take out the high, and we could potentially do something like that. How will the non-farm payrolls affect crude oil? It really depends on how it affects the dollar. If it causes the dollar to gain, and you see copper prices, metals, and currencies, everything sort of move to the favor of the dollar, then that could push down crude. But crude oil as well is something that people use on a day-to-day basis, right? So if people are making more money, there are more people employed, they're probably going to buy more cars, use more energy, factories, and everybody that needs energies and crude will use more of that. So you have that sort of conflict there. There's no right or wrong here, but you could probably sell it on the break to the downside for a bit of a decline, a little bit of a scalp. But my sort of longer term outlook would be to just buy down here. Finally, this is the German DAX. It took out the short-term downtrend, and it's probably gonna sort of give people a bit of a headache again. And there's probably not too much to do here, to be honest with you guys. I think you will be getting hurt unless you're very savvy on the DAX and you know how it works. Personally, I think we sort of moved to the upside now. I think we're going to head higher. In fact, if you look at things like the Russell 2000, it sort of ended its downtrend here a few days ago with a small group of people that I work closely with. We said look to buy here at 1657. It's looking good. As well, NASDAQ 100, we've been bullish for the last few days, and it looks like it's starting to head to the upside. So you have opportunities. As well, in this specific setup or specific webinar, we did talk about the Australian stock market. I shared with you guys, and I said that I bought down here. And then I also said that if we take out this high here, that the market should potentially head to the upside. And we had that bridge yesterday and pushed up a bit. Obviously, it's difficult to say with the non-farm payrolls. I don't know exactly what the non-farm payrolls, how things are going to play out, but I think at the end of the day, economy in general is doing good. And, you know, as long as shit above 61.85, we should head to the upside. In fact, here, so this is ascending triangle. So depending how you measure, you have a target like that, which means that you could potentially move to the upside. And there's different ways of dealing with stop loss orders, but one could potentially work with yesterday's low like that, or this low here. So I think up to 63.45. And then if you look at it from a big picture perspective, like what did I buy the first time? Well, I bought the first time because the market was in a rectangle. It was stuck here. You can see how the market was trading sideways between this 56.31 level, and then you have like a double top here at 61.55, I think it is. Difference between low and high is 9.12%. And when you take out a range like this, you will sometimes get that same move. I would suggest the move to the upside. So probably not going to be an easy ride, but definitely to the upside, I would argue. Especially because at the end of the day, the world economy is doing good. Don't read too much into what they say on Bloomberg and CNBC. I know it's not like great, you know, especially not in certain parts of Europe and certain parts of, say, the US, you know, that's what we have, you know, a lot of these sort of alternative ideas like the Italians, for example, you know, not anti-EU, but, you know, anti-globalization a little bit across the world. And, but if you sort of ignore that for a few seconds and look at the aggregate, then, you know, most people are employed, most people are getting a bit of salary increases. It's not like 2006, 2007 when, you know, you had no education and you could still get very good pay in the UK and many other parts of the world. Now it's more, you know, you do have jobs, but you know, you're driving a Uber or you're working for Deliveroo, so you're not necessarily getting as much money for your time as you used to do. But at the end of the day, everybody is sort of making money, and that is sort of the important thing for stock markets at the end of the day, because this is not the well-being of the individuals of a country, and it's the same thing with the stock markets in general. This is the well-being of corporate America. Remember that. In corporate America, you know, with tax cuts and everything, it's doing better than it's done for a long time. Okay, let's see if we have any questions. Good morning, Maurizio, I mean. And Esam, I hope you're well as well. Thank you so much for joining me this morning. Guys, if you have any questions, just let me know. We are going to host a Known from Perils webinar later on today in this page. So you can just come back. We are going to look at the markets. I'm going to provide some live technical analysis. And we will look at the data together, a few setups that you could potentially work with. And that's going to start at 1:15 p.m. London time. As well, a little tip here, if you just arrived, you will usually just sort of be pushed to the end where I'm live. One little tip here is to go back from the beginning, as I cover all the markets in the beginning of the presentation. Yeah. All right, I'm gonna wrap things up. Click on the video here, and don't forget to like the video, please. And then there's a little button down here where you can click on subscribe. That means that when you are on your home page, you will get sort of some notification that we publish content. And if you always want a notification for everything, then you press on the little bell button here. Then you get a notification for every video that we're doing. All right, guys, thanks so much for watching. Have a good weekend, and I'll see you guys on Monday morning at 9 a.m. London time. Thanks.